Hello, this is Barry Wolfe with the Wolfe Retail Group of Marcus and Millichap with this week's Capital Market Update. Got a little special treat this week. I'm being joined by Steve Goldwyn with Marcus and Millichap Capital Corporation, which is basically the mortgage brokerage division of Marcus and Millichap. So Steve, we've seen over the past week, I believe the 10-year Treasury ended last week at about 3.14%. Is that kind of right in that ballpark?
It had run up, you're right, Barry. It had run up 20 or so bips in the last 10, 15 business days.
So what's the real market implication of that? Obviously, we're all aware the Treasury rates have been increasing over the last number of months, or really over the last year. But in reality, that ties to some very positive economic signs that the Fed is seeing as far as the overall U.S. economy. What's the real world implication? What are you seeing? How are these interest rate increases impacting the loans you're working on, that you're pricing for your clients? What's a real world impact?
The reality of it is, Barry, that we're still in a low rate environment. There's no question. And lenders, whether it's life insurance companies, credit unions, banks of all magnitudes, and for your case and with your clients, the specialty lenders that are making loans on single tenant and multi-tenant retail properties. The fact is we're still in a good low rate environment, and the fundamentals are the same now as they were a year to 15, 20 years ago. Good loans are being made to good borrowers on good assets. What does that mean? It means that, yes, lenders are sensitive to market conditions. And obviously, we've seen a rise in the different indices, prime, treasuries, et cetera. But if we have good fundamentals and we've got probability of repeatable income and good credit tenant and remaining lease term, they're going to make good, strong loans. That hasn't changed.
Okay, that's fantastic. So in reality, we've still got a good market environment for debt. What are you seeing, just generically speaking, as far as rates, as far as whether it's on both a single tenant retail and multi-tenant retail? Again, just generically, I know every deal is different, every borrower is different, based on a lot of stipulations. But what are you seeing overall?
Lenders on the local side, local banks, or should we say portfolio lenders, whether it's banks or credit unions, have a new par of, call it low fives, 5.25 for your retail properties. And the local banks are more suited, as are the credit unions, for shorter term fix. They fill a role, but you're not going to get the long-term fix that a life company will offer. So to answer your question, we're seeing the new par pricing, 5.25, call it low fives for retail from local banks and credit unions for a 5-year fix. Once we get into the life insurance companies, they're offering the same rate but much longer fix. In fact, we've been able to deliver even high fours on 7. Once you get into 10 and 15-year fix, then you're going to be deep into the fives. But there's a big difference, and those loans are very available from life companies, long-term fix. So it really depends, and to borrow a football phrase, which I know you always love, we take what the defense gives us, and that's our role on capital markets to deliver the best available given the situation. So if you have a borrower or a property that calls for a local execution, if it's a tertiary market, we can find a local bank or a credit union to deliver a short fix, or life insurance companies are definitely in play, as are some hedge funds offering long-term fix. So yes, it's about rate, we know that, but it's really about what's the best home for the loan given the overall situation. Lenders form still, whether it's 10, 20 years ago or now, they form an internal risk score based on the sponsor and the asset. And again, one thing to remember, we're still in a low rate environment and there's good loans available.
Okay, no, it's all fantastic information. So if you have any particular questions related to any of your assets or properties or deals you're pursuing, please feel to reach out to us directly. Steve is also active on LinkedIn. Can feel free to connect to him on there. Reach out to him on a call. I know he's available anytime to discuss. So again, this is Barry Wolfe with Steve Goldwyn, Marcus and Millichap. Have a fantastic week.
Appreciate it. Goodbye.